Hey YouTube, not a happy day in the markets today. On this Wednesday, you can see I'm down almost 13% here today. Probably one of my biggest losses to date in Robinhood. I'll talk about a little of the implications of why this is happening and all that kind of fun stuff. But, just kind of browsing through my portfolio here. You can see, my options, match calls, down 41%. So, obviously the biggest driver, my micron calls, not much percentage wise in my portfolio, but, also down. Activision's up, but, Square and Match are definitely the big drivers and, causing these losses here. But, just kind of looking through all the stocks, regular 4 or 5% drops in the market today, especially in the tech sector. So nothing is really safe, honestly. Kind of going through the watch list as well. You can see the indices as well, not doing too well. Basically just a sea of red today. So, Square dropped almost 20% today, which is ridiculous. So not a single hint of green in my portfolio. So other than my Activision options. So, there's a couple different things happening. If you guys haven't been reading the news, basically, like I mentioned before, it's basically what's causing this is the implication of what higher interest rates mean. So, the Fed's been hiking interest rates consistently over the last year. And that's, good and bad because the economy is doing well. They don't want it to overheat. They don't want inflation to occur. So, higher interest rates, they mean several things. They encourage people to save more because, their savings accounts are going to be gaining more money. And also, there's that transition from stocks to bonds, as people look for safer avenues and more stable returns. So, that's part of it. But basically, looking at it broadly, with these higher rates, there's going to be less home sales. The 30-year fixed mortgage is hovering around 5% now when it was, about 3 or 4% a year ago. So, that's increasing. Higher credit card debt, people are going to be, their APRs on their credit cards are going to be increasing. So they're going to be having more debt, which means less consumer spending, things like that, lower car sales. Obviously rates are increasing on, all these different types of loans. And then kind of looking at corporations, it's going to be causing, corporate debt to be more expensive. So, things like companies increasing dividends as fast or doing stock buybacks may not be occurring as often. So, something like that might be slowing down. So, just kind of things to look at in the market in terms of interest rates. That's kind of what's going on. There's going to be another most likely quarter point increase at least in the next Fed meeting this year. So, they're just going to continue going up unless something changes. That's kind of what's going on. I honestly didn't expect it to be that bad in terms of portfolio performance and, indices performance. You can kind of see past week performance here, down almost $3,000, month. And then, obviously I'm up 3 months and my year performance due to my options. But, that's what it is. That's the market. Don't invest in what you don't want to lose, basically. So in terms of what I'll be doing, I'm not selling. I'm holding. I honestly think that this is just a short-term, dip like we've had so many times in 2018. Even Warren Buffett said, many times that, he doesn't look at things like politics and interest rates. You just kind of got to look at the health of the overall company, health of the overall economy, which is still very good. Wages are going up. Things like that are still trending positive. So, there are definitely going to be some deals with this dip. It's not signaling a recession, nothing like that. You just kind of look at the economy as a whole in situations like this, and just be comfortable to hold for prolonged periods of time. So, that's kind of what it is. See a red, see how much longer something like this could last. Yeah, nothing really is safe, but I'm sure some of you can get some good deals. Yeah, that kind of brings me to my next point. Let me know what you guys are buying. Any specific stocks you're looking at within the tech sector or industrial, whatever it may be. So consumer discretionary. What are you eyeing right now? So unless you're just kind of purchasing the S&P 500 or the NASDAQ indices. So really nothing is safe in terms of this. So just kind of the higher interest rates are really kind of raining on the parade here. So yeah, this is just kind of a quick video explaining my thoughts on it. Obviously not going to be doing anything. Should be pumping in some extra capital into my Robinhood soon, so probably be buying some companies that I think make sense on this dip. So but yeah, on an unrelated, kind of a related side point, so a year ago I actually reached out to Robinhood to ask for some stickers, and they actually arrived yesterday for the first time, and I completely forgot about it. But they'll do it for you. If you guys are interested in Robinhood stickers, any kind of merchandise, things like that, feel free to contact support, and they'll get back to you. In this case, they got back to me basically a year later. So definitely cool looking stickers. They sent me about 3 different ones, and yeah, just kind of put them on your laptop or phone, whatever it may be. So yeah, so just a quick video, guys. Interest rates, that's my portfolio. So look forward to better days. Hopefully you'll see a green sometime soon. So hope everyone has a great night, and hope everyone weathers the rest of the week trading somewhat decently. So everyone have a great night, and we'll see you guys soon. Thanks for watching. Bye.